Now, last week, the RBNZ met and they kept their hawkish rate path. The RBNZ board debated whether they would have in fact needed to hike by 75 basis points. Now, in the end, they stuck to 50 basis points. They were worried that the weak New Zealand dollar was an inflation risk for the domestic economy, and they expect to keep hiking interest rates. So that should keep the New Zealand dollar supported over the medium term and does strengthen the outlook. The Eurozone, by contrast, is struggling with rising inflation, threats of a recession, high energy prices, and a semi-war footing with the Russian and Ukraine crisis. So does this open up a Euro-New Zealand dollar sell bias? Now, if you just take a look at the pace, see it's been tracking higher. We had a symmetrical triangle that was false break to the downside. So if we were to see downside, we would like to see this trend line break and fall lower. And if the fundamental outlook does favour Euro New Zealand dollar selling, also notice that we have the seasonal bias towards selling the Euro New Zealand dollar over the last 20 years. The pair has formed 16 times between the 7th of October and the 7th of November. So the average return has been minus 1.36%. Now, the major risk for this is if we get any backtracking from the RBNZ over interest rate hikes or recessionary concerns that might slow the path of rates down. Also, note that the New Zealand dollar can be very slow to respond to New Zealand monetary policy for reasons that are not entirely clear to me. So just to be aware that sometimes the New Zealand dollar doesn't respond to monetary policy as quickly or as responsively as you might otherwise expect, and as it does for other central banks. Also look at the bond yield spread between German bonds and New Zealand 10-year bonds. You can see that yield spread is pushing higher, but if that sort of tracks lower, we can see here that there has been a trend line break on that bond yield spread. So it is reasonable to potentially expect selling, but using this trend line to define and manage risk could be helpful in this circumstance. Remember, don't just trade it, but seize an exit.